Hey there, fellow traders and investors. Cecil Robles here with the tradingexperts.com. Hope you had a great Thanksgiving with your family. If you're in the U.S. celebrating Thanksgiving, if you're not in the U.S., then you missed out on some good turkey. And hopefully you didn't spend too much money on Black Friday. I tried to stay in as much as possible because I just can't stand the madness. I'd rather do my shopping online come Cyber Monday, so that's what I intend to do. And then, of course, today is Small Business Saturday. Go out and support all the small businesses in your community, of course, because they are the definite driving engine of our economy, and they definitely could use your help. So make sure and do that today as well. I'm getting ready to travel to India on some business and to Europe. And I'll be back this next week. But I wanted to come to you with some market analysis before I left. Obviously, it's been quite exciting since the U.S. elections. There's been a lot of volatility in the market. There's been a lot of action and a lot of trades to be had, really, if you know what to look for. So I want to kind of show you what to look for and then let you know what to look for in the coming weeks. I think there's going to be continued volatility. I think we're going to see U.S. stocks continue to strengthen. I think we're going to see the U.S. dollar continue to strengthen. Although we may have some pullbacks here and there, I think we're going to be on a kind of a continued upward path here for a little while, at least until the January inauguration happens. And then, of course, once the change in U.S. policy begins to happen, we'll see what that based on presidents, we'll see what that does at that particular point. But for right now, let's look at the dollar yen. The dollar yen is one of my favorite pairs to trade here recently, and essentially we're looking at the weekly chart right now. One of the things that we want to do is we want to step back as far away from the chart as possible. That's what Ed Seykota said. He was a famous trader, mentioned in the Market Wizards books, and he turned basically like $12,000 into $15 million over the course of about 15 years, and so that's pretty good. But what he said was step back from the charts, get a big picture view first. So that's what we're going to do first. We're going to get a big picture view, more of a macro view than a micro view. Okay, we're not looking at day trading necessarily. We're looking to get the macro picture. Then we'll step back and we'll make an educated and informed decision based on kind of drilling down into a more manageable time frame or a more manageable trade period. So we're looking at the weekly chart, and that simply means that each one of these candlesticks, these are called Japanese candlesticks, and each one of these candlesticks is representative of 1 week of time. So this is a full week of movement within the market right here. So these last 3 candles here, you can see, are 3 full weeks of movement within the market, and you can see just how much movement there's been in the market since Wednesday, November 8th, the presidential election. You can see how much movement, I mean, candidly, there's been just a huge amount of movement. If I look over here and I kind of take this measuring tool, we can kind of see how much movement there's actually been. And here you can see that we've had about a 10.87% change in this one particular currency, and that's enormous considering the fact that most currencies only move, a big move in a currency is considered a couple of percent, but you can see here since the day of the presidential election when it had this low down here all the way up to the high up here, we've had literally almost an 11% move. That's enormous. So obviously it's been a good time to trade. It's been a good time, especially if you know what you're doing. But here you can see this kind of pattern setting up here on this weekly chart, and I kind of want to go into this a little bit on the weekly chart. We've had this big downtrend. This is what's known as a downtrend. And down here at the bottom, you can see that we bottomed out. And at the same time, we've got this indicator on our chart called RSI. And RSI is a great indicator for trending markets because it kind of gives us insight into when a market is potentially bottomed out and we can start looking for a change. Here we had kind of the market drop below a certain level in the RSI as well, and it didn't quite stop there. It kept going, and that was an indication that this market wasn't done yet. We had another test, and then it broke down to the downside. So we know that this is still a trending market at that point. Here, on the other hand, we had the RSI go below this level here, this 70, which is kind of the critical level there. we had it go below that level, and or 30 rather. We had it go below that level of 30, and you can see that what happened after that was we had price kind of pop back up, went to this 200-day moving average, then it came right back down and retested these lows down here. And it not only retested it once, it retested it twice. So we have almost what I call a 1, 2, 3 pattern here. So you got boom, 2, and then 3. So 1, 2, 3 right there. It's kind of like that W pattern almost. And this is a significant sign because the market does a lot of things in threes. This is a pretty significant sign right here that the market is going to begin to shift around. And that's exactly what happens when we look here at this black candle. This is what we call a bullish harami candle. And this black candle right here kind of gives us insight into the market beginning to move to the upside. Now, while I don't necessarily trade the weekly chart because, again, you just have to stay in it so long in order to do anything, what I use is this information to go to the daily chart and begin to look for opportunities on the daily chart. So if I click on my trend line here, what I'm going to do is mark this area in the chart. This was on this was the week of October 3rd. So I'm going to mark that area on my chart. I'm going to go over here to my daily chart, and you can see that that's the week of October 3rd right there. Okay, and you can see down here again the same kind of scenario. Here's the bottom, here's the second bottom, here's the third bottom. It got tested actually 4 times. 1, 2, 3, 4 right here. 4 times it got tested, and then you can see we had a number of bullish haramis right down here. You can see those black candles. Those are called bullish haramis, and then price begins to move up. And then it gets to the upside of our Ichimoku cloud here, and it's making new highs. And then we have a pullback here, and then boom, price heads up again. This pullback is significant, and this would have been a good place to enter the market. However, what would happen is on the presidential election day, you can see this big long spike in the market. If you got in and you had a pretty tight stop loss, you probably would have gotten stopped out for a loss. That's not that big of a deal, because what I want to show you is when the presidential election happened, this is on the 8th into the 9th. So this is the 9th of November essentially. So it starts at 5 p.m. Eastern Standard Time on the 8th, and then it moves over into the 9th. And so the close of this day right here is actually the 9th of November. And so right here, when we have this big long, we call this a wick, this big long black line here on the bottom of this day, that's the low that the day made. This is the high the day made. And price, notice where price closed. It closed right up on the high, even though it made this very low low down here. Closed right up on the high. And that's pretty significant because it's showing us that momentum is in favor of buying. It's in favor of the buyers. And so we want to be looking to buy in this particular scenario. And this is a pretty strong bullish momentum pattern right here, especially since we closed above the highest high that we've had here in several weeks. You can see this was the highest high right here, and we actually closed above it that day, and we closed right at the high of that particular candle. This would have been a great buying opportunity right here, and I kind of want to show you what really separates those that succeed long term, investing their own money or trading for others, is the fact that they look at trading opportunities in terms of reward and risk. So what's my reward potential? What's my risk potential? And in this case, the reward potential was really very, very high because we have a lot of momentum in our favor to the upside. The risk potential is fairly small. If we take, and I'm going to put this little deal on here, and we're going to go back to say right here to the low of this particular candle would be our risk, and our potential reward at this point now, and it could go higher, but our potential reward at this point, based on that amount of risk, based on an entry right above this high here, and a risk of right there, you can see our risk to reward ratio is a 4. So that means that for every $1 we risk, we're potentially gaining $4. For every $2 we risk, we're potentially gaining $8. For every 10, $40. For every 100, $400. For every 1,000, $4,000, and so on and so forth. So in this particular case, based on the momentum that we've seen, if we go back to the daily chart now, if I move this line over here to this point in the chart, and we go back to the weekly chart, we're going to look and we're going to see where this is. So this is right here during this particular area, okay, on this candle right here. You can see it. And you can see, I'll go ahead and move this now that we've kind of gotten our reward to risk ratio out of the way. But on this candle, you can see how it's come down. Again, it's closing right at the top of the candle here. So that's very, very significant, especially considering that we've had the RSI rollover. We've also had this kind of W pattern in here where we've had a triple test of this bottom here. So it's almost a triple bottom right here in this particular area. And we see the momentum to the upside. This is where you could put on, literally, if you had a $10,000 account that you were investing into your currency trading, your Forex trading, you could literally put 5% on the line on this trade, and that would not be a significant risk considering everything that we have lined up here. And so the more that you have lined up in your favor, the more risk you can put on a trade and be comfortable about it, knowing that you have a very, very high probability of success in that particular trade. If you put a 5% risk on a $10,000 account, it's $500. It's not going to kill your account because you're not making these kinds of trades every single day with that kind of risk. So it's not going to kill your account even if you lost. But in this case, if you had a $10,000 account, you put $500 at risk at a 4-to-1 reward to risk ratio. Now you're making $2,000, or you're already up $2,000 in the space of 12 trading days or 11 trading days. So that's the kind of stuff that you want to look for when you're looking to trade the markets. You don't have to be at it all day long every day. You don't have to day trade. This is on the weekly and the daily chart. That means that every day you have a decision to make, or every week you have a decision to make into what you're going to do. And you simply look at it, you look at the kind of analysis that I've just done, and it's very simple once you've kind of trained yourself and you've trained your eye to be able to see it and to be able to do it, then you can begin to implement it and put it into place at a much faster rate than obviously when you're first starting out. So I hope this has helped you. I hope you've learned something from this. If you have, like this video, share it, leave a comment, let other people know about it, and I'll be putting more of these out for you in the days ahead. Now, what are we going to look for now in the coming days? Well, here, if we back out again, Ed Sakota said, make sure you back out from the chart. I want to look where the current price action is in the market. And by that I mean, where is price in relation to other points within the market. So if I just kind of put a horizontal line here and I go back and I can kind of see, if I stretch this chart out, I can kind of see, is there any points that I'm at right now that could possibly be some resistance points? And I can see one right here in this particular area. There's a saying in trading and in technical analysis that resistance that gets broken becomes support, support that gets broken becomes resistance. Well, here was support. We had, remember, kind of the same kind of bottom that we had over here. We had 1, 2, 3 tests, and instead of going the opposite way, it broke to the downside. So now this support has become resistance. You can see that price came right back up into that support area right there and fell off of it. Came back up again and fell off of it again. So now we're coming up to that same support area. We've actually kind of surpassed the bottom of it, and we're sitting there kind of stalled out in this particular area. So my analysis, I believe this market is going to continue up, but I think we're going to see some sort of a pullback here. And that's okay, because if we get a pullback in the market, and we're now looking at an uptrend in this particular market versus a downtrend, it gives us another good buying opportunity. So anytime the market pulls back, it's good to look for that buying opportunity, especially if you're in a long-term uptrend. If you're trading stocks right now, if you're invested in your 401k in stocks, listen, don't just bail out at the first sign of a correction in the market, or at least look at adding on to your current positions if there's an opportunity to do that, because a pullback is often a great time to buy into the market. We had in the S&P several months ago, we had a pullback, and I can pull that up for you here. Let's look at the S&P 500 just very quickly, and we'll go to index and SP. And here we go with the S&P 500 index, and I'll kind of look at this as well. You can see several months ago we had a pullback here within this market. If we go to the weekly chart, we'll notice that this pullback came right in here at this particular level. And if you're looking at more of a long-term type of a 401k or something like that, you'd be looking mostly at the weekly chart. But you can see we had this pullback here, and then the last 3 weeks you can see this major rally. Well, we actually were indicated to this as being a potential rally based on some of the technical tools that we use. We have a 50 exponential moving average right here. We have Williams percentage range down here, and this pullback goes back below that and then kind of creates this slingshot, so to speak. And so when the market gapped up right here, that was actually a pretty significant sign that this market was going to continue up, and that would have been a great buying opportunity to actually add more in to stocks that are in your portfolio that coincide with the S&P 500 index. So it's really just all about knowledge, and knowledge is power. I've been at this for over a decade now, nearly 12 years. And so this doesn't happen overnight, but if you give yourself to studying, if you give yourself to learning and growing as an individual, as an investor, then this kind of becomes second nature to you. I remember one of my mentors told me one time, they said, you want to know your strategy. You want to know your system or your strategy like the back of your hand. Like, literally, all the little, blemishes and things that are on your hand or scars and you could tell all the stories about them. You want to know the exact same thing about the market. You want to know have that same knowledge and that same kind of just, almost second nature in terms of your strategy that you do, like if you were looking at the back of your hand and saw a scar and you know exactly what it was from, when it happened, so on and so forth. That's how you want your strategy to be in your mind. You want it to be fresh. You want to know it. You want to be educated and informed, and that's important, and that's how you can really make a lot of money investing and trading. So again, I hope this helped you. If it did, like it, share it, comment, let me know what you thought, and I'll see you in the next video.